Welcome to Real Estate Investing Abundance, the show for busy, fulfilled professionals like you to learn how to develop financial independence built on solid, passive real estate investments. Now, here is your host, Dr. Alan Lomax.
Hello, enlightened investors. I'm your host, Dr. Alan. Delighted that you've joined us today. Are you a busy professional, passionate about the work of your calling, yet realize that even though you love what you are doing, you're exchanging your time for money? You know that if you were to lose the ability to exchange time for money, your financial well-being will be in jeopardy. If you can relate, I have great news. Steed Tucker Capital is an investment company designed for professionals to develop financial independence built on solid, passive real estate investments. Remove the anxiety of an uncertain financial future and go to steedtucker.com. Get your free one-page 10-step guide to passive real estate investing. Enlightened investors, we have a timely show in store for you today. We're going to explore the other side of the cap rate coin and how we can get high returns in low cap rate markets. Anthony Walker is with us today. He is the CEO of Buckingham Investments, a Los Angeles area multifamily brokerage company. Anthony believes, and I wholeheartedly support his belief, that real estate wealth is not created only at the time of purchase, but it begins well before an investment is ever made through education and planning. Okay, Anthony, let's do it. Share a memorable experience from your formative years that helped you to be the person you are today.
Absolutely. Thanks for having me, Alan. So you asked me this question, and the first thing that came to my mind is a really old memory. I don't know why it popped up, but kind of an interesting experience. I grew up in Minneapolis, Minnesota, actually. And so we have humid, hot summers. I grew up pretty close to a small lake in the middle of the city. And I had an early business idea with my brother. We went down to the lake and started a lemonade stand, like a lot of kids do, right? So we went down to the parkway where the bikers go around and then the walkers go around a path inside. We got our little setup going. We got our pitchers. We made a bunch of lemonade. We set up on a hot summer day and we killed it. I mean, we were selling lemonade right and left. It was $0.25 a cup. I can't remember how much money we made, but it was a lot. Well, about halfway through our stock of lemonade, a park police officer stopped at our stand and we thought, oh, great, the police officer is here to buy some lemonade. They're going to be a customer. Well, the conversation went a little bit differently than that. They asked us for our permit to be selling lemonade in the park. And we're probably maybe 7 or 8 years old. We're young kids at this time, right? So obviously we had no idea that we needed to have a permit to sell lemonade. And we said as much. I thought maybe they would just tell us, okay, you should probably go do that next time, or you can't do that here in the future. But no, we kicked out of our lemonade stand when we were about 7 or 8 years old and sent packing home by the park police. So I don't know what lesson that gives you. Maybe check the rules before investing type thing, right? But that was an early business that saw initial success tempered by the red tape, so to speak.
What that tells me is that the answer is always yes until they say no. So good deal. Well, here you are in Southern California, the state that, well, according to the hype anyway, everyone is fleeing from.
Right.
And yet you love it and you are doing dynamically well. So how did you get to Southern California and why do you stay while it seems that so many others are fleeing?
Sure. Well, first of all, don't believe the hype. Not everybody is fleeing, although I know it's a popular topic to rag on Southern California or anywhere in California these days. But I came to the state in 2000, so hard to believe, but that's 21 years ago now. 21 years ago next month, I came here for undergrad because my family came here on vacation when I was 16, growing up in Minneapolis in February. And I got off the plane and thought, wait, you can choose to do this? That sounds like a pretty good deal. So like a lot of other people, I came out here for school with the intention of staying. It seemed like a great town, exciting place to be, lots going on, beautiful weather, the beach, all that stuff, right?
We'll be right back after a word from our sponsor.
Would you ever invest all your money in a single stock? Very unlikely. Yet investors are willing to risk $50,000 to $100,000 in a single property in real estate all the time. Avestor is the world's first customizable real estate investment platform. Investors can build their own custom portfolio selecting investments across multiple asset classes such as single-family homes, multifamily, student housing, self-storage, and shopping centers. You can also invest across multiple markets and different time frames. Avestor also enables other real estate entrepreneurs and syndicators to build and use Avestor's infrastructure and cloud platform to create their own customizable real estate funds. To learn more, visit us at avestorinc.com. Avestor, real estate investing made simple.
And went to USC for 2000 through 2004. Nothing to do with real estate or business at that time, but it got me to Southern California. I ended up just in a corporate job with an insurance company, that day job basically, right? And I wasn't really doing it for me, so I decided to go to business school at night. This was around 2008. Actually. So interesting timing. I started business school in 2008 and went to go get my MBA while I was still working full-time in the corporate world, and watched this happen while I was there, right, to the real estate market. I had actually made an investment property purchase in 2006 of a vacation rental condo. That was my first foray into real estate. I was still pretty young. I was only 25 at the time. And it was interesting to see everything kind of just implode, the debt crisis, the subprime crisis, everything that was going on then. I'm sure all your listeners have been through that. But it was a really interesting time to be in business school because I was learning about all these topics, about economics, about property markets, about evaluating companies. And during that time, I took a real estate investments class. And I thought, this is awesome. This is great. This is so simple. It's all right there in the textbook, how you make money. Thousands of people have been doing this for thousands of years. One of the oldest businesses on the planet. And at the time, I was trying to figure out what kind of business to start for myself because I just didn't want to be in the corporate world anymore. So that's what kindled my interest in the industry, and ended up meeting the guys who were running Buckingham Investments at that time. This would have been 2010 or so, and started buying local multifamily property. And the basic premise is the same as it was now, as it was when I met them, as it was in the 1960s when we started this company, is that basically Southern California is a great place where everybody wants to live. The weather's gorgeous and there's not enough land to satisfy those needs. So that mismatch between the demand and the supply is basically going to be there. So in a nutshell, that's how I ended up in Southern California real estate. 10 years later, I've been investing here locally in Southern LA County. I currently own 16 buildings, about 120 units. I typically invest just my own funds. I've syndicated in the past, and I have started doing a little bit of syndicating again now, but it's been a number of years since I was doing that. But most of the buildings that I have are just with my own personal funds. And then I'm lucky enough to be in a complementary business of being a multifamily broker in the space that I invest. So I get to do this every day for my day job, help clients invest and create wealth, and then grow a portfolio for myself too.
So why is it that we are always constantly hearing that coastal markets are places to be fleeing from high cap rates and regulations and tenant-friendly environments?
Sure.
So why do you love staying there where there's such a bad reputation?
Well, it's nice to buck the trend, first of all. It makes your life a little bit easier, but there is still plenty of demand here, judging by the way the local real estate market is going. But to your point, I think there is a tendency on property owners, landlords, investors to feel like, the tenant-friendly legislative environment here and the direction of the politics sort of has everything to do with the returns that you might see. And although I will admit that it can be more complicated to invest and manage in an area like this, it's a talking point that at some point got traction in a lot of the circles and everybody got excited about it. And for a while there, especially 5 years ago or so, cap rates really were a lot everywhere else. These days, they're not that much higher elsewhere in the country even than they are here. So I'm seeing people come back. But I think in the investment community, there's a almost singular focus, right, on cash flow and cap rate, and just trying to get that as high as possible. And a lot of people don't understand what long-term investing for real wealth might look like if you freed yourself from thinking it's all about cash flow and cap rate. Now, it has to be to some extent about cash flow and cap rate to pay the debt service. And if you have limited investors, most people expect cash flow out of their investment.
We'll be right back after a word from our sponsor. As an industry-leading relationship-focused design-build construction firm, Mosaic Construction has worked in many different asset classes from multifamily to retail, medical, industrial, and commercial. Mosaic Construction works to execute interior and exterior renovations with their team of trades and project managers. Their experience with value-add improvements has resulted in increased ROI and long-term value of the assets. They work nationally in partnership with local trades to deliver thoughtful, problem-solving construction management solutions to all their clients. For a personal, no-obligation consultation, call Ira Singer, 773-491-3145, or email Ira at mosaicconstruction.net. You can also find Ira on LinkedIn.
But investing in an area like Southern California, if we look at, say, like 50 years of data here, the overwhelming trend is wealth creation through appreciation generally. So that trade-off between cap rate and appreciation is what makes investing here so powerful. It takes more patience, though. But what you're doing is you're taking advantage of that supply and demand disequilibrium. Lots of people want to live here, and they still do, despite what you might read about people moving to Phoenix and Texas. And there's not enough land for us to build, especially affordable supply to satisfy that need, which there really isn't. Then over the long period of time, values, they obviously don't go up every year, but on the overall, they really do. Our average rate of appreciation here every year going back to 1965 is about 6.5%. So if you apply good debt to that and leverage and you buy in the right areas that aren't super expensive, we don't do a lot of deals like right on the beach, so to speak, or, in areas like Beverly Hills or Santa Monica. But if you buy what you would call workforce housing or kind of second ring cities in from the beach, you can do really well.
Well, how does it to operate in California? Because it is heavily regulated, not just in terms of it being tenant friendly, but there's all kinds of codes and regulations in conjunction with running your facilities and maintaining your facilities that are probably much more extensive than they are in many other areas of the country.
Right. It's all about knowing the rules. It's not that bad if you know what you're dealing with. If you come in and you just assume you can do whatever you want, you're probably going to get yourself in trouble. So to your points there, we've got a couple things going on here. We have statewide rent control, which is new as of January of 2020. It got voted into law by the Assembly in 2019. It's a pretty mild version of rent control. The increase cap is 5% plus the change in regional CPI. So currently this year from April to April, you can increase rents by 8.6% on a rolling 12 months. So that's pretty good. It's not super strict. There is just cause for eviction with a few exceptions that you can use that are pretty reasonable. And it's really not too bad. Where it gets complicated, though, is understanding where you or where your property might fit within a variety of other rent control ordinances or, tenant protection ordinances at each city or county level, and that can vary widely. So a lot of people talk about investing in LA, and LA is a huge, complicated place. Los Angeles City has one of the most restrictive rent controls in the country. So that is very different from investing in a separate incorporated city here in the LA area that most people would still consider to be LA. So you have to the individual rules there. The city of LA rent control applies only to buildings built prior to 1978. So you can look at that. Now there's quite a few buildings built after that. It's much more restrictive, though. The just cause for eviction protections are more extreme. The rent increase cap is generally 3 to 4% a year, which is tough to catch up to market. And there's very little mechanism to vacate tenancies if you're having problems. But if you know where that applies and where that doesn't apply, and there could be discrepancies even with addresses that are in LA, or they're in another city, but they're technically in LA, and all these weird layers that you have to understand. But if you do, and you know the system, you can work around it. And what we've seen over the years is that actually values in rent-controlled areas tend to appreciate more, and rents go up faster in rent-controlled areas too, because unfortunately, it doesn't really work and serve the tenants like it's supposed to. It creates scarcity, which of course drives rents and prices up. The other part of your question about codes and regulations and other things, those are important. I think in the apartment building space, it's less complicated to operate than if you're trying to open a retail center or an office. That's much harder. You've got all kinds of code requirements on buildings that are open to the public. On apartment buildings, it's pretty basic. If it exists and it's been there, in its configuration, you're not going to have problems with the authority. Some cities like to come and do inspections. They'll look through units. Yes, it's an excuse to give code violations where they find them. But when you get them, it's things like make sure that the stairs are just right or that there's a broken window, stuff you should be fixing as a good landlord anyway.
Enlightened investors will be right back after this important announcement. I have a big ask that will only take a moment of your time. Ratings and reviews are the lifeblood of our podcast. So to leave a review, iPhone or other Apple iOS device users, go to Apple Podcasts or iTunes. For all you non-Apple device users, go to podchasers.com. On either platform, search for Real Estate Investing Abundance. Once found, please leave a review and a rating. Subscriptions are also vital to our show's success, so please be sure to subscribe on your favorite podcast app. It is free to subscribe, and you can unsubscribe at any time.
So, I wouldn't say that I have a problem with draconian city inspections or anything like that. And that generally, if you kind of know the environment, you're going to be just fine. It's certainly something that you have to pay attention to. And it's going to impact each deal differently depending on where it is, what the rents look like. If you're doing value add investing, you have to understand what your rights are as a landlord as far as getting rents up to market, how that's going to impact your holding period, your financing, and all that kind of stuff. And so it's not for somebody that wants to just jump into this and not understand those rules. But I think anytime you add a whole bunch of regulation, you're creating inefficiencies that can be, I don't want to say exploited, but taken advantage of by people that understand them, and know how to play by the rules while still operating here. You can do very, very well.
Yeah, I can see how that regulations could work positively for those who know how to operate them. And it kind of decreases the competition because if you don't know it, you're going to be at a real disadvantage. So the data, talk to us about the actual data and what is the actual data telling us in conjunction with Southern California?
So yeah, it's kind of interesting. The pandemic obviously has upended the real estate markets across the whole country. And you hear and read a lot of articles about, especially single family prices going crazy. Obviously the industrial and warehouse space is going nuts because of all the e-commerce that's been happening over the last year and a half. I'm in the apartment space mainly. And, here locally in our apartment space, it is a pretty level market. Honestly, we've experienced solid appreciation over the last few years. If you measure in price per square foot, we're at the low 400s on average in Southern LA County. It's like $420 a square foot, something like that for apartment buildings here, which sounds probably crazy if you're used to looking in other areas. $350,000 a door is pretty typical. In the areas we're investing in and our clients are investing in, $300,000 a door is more usual. Cap rates range. You can find a 1.5 cap or you can find a 5 cap within 10 miles of where I'm sitting right now. So that makes the market really interesting to operate in because you can choose whatever kind of investment you want to do. If you want to do, a super luxury beachfront thing that's going to be a lot of capital, and very low leverage, but potentially high returns, you can do that. If you want to do a higher yield, more workforce housing type deal, which is more typically what most of our clients and myself work, then you're getting 4.5 to 5 cap here. And that's not that much lower than what I'm hearing from a lot of people that are looking in other states around the country. So, to me, if I live here and I'm an investor here and I can find a deal like that, and sometimes these are even a mile or under 2 miles to the beach, that makes a lot of sense for me versus somewhere else. And I could say those cap rates have been virtually flat going all the way back to 2018. So it's kind of weird, right? Like cap rates, I think everywhere else, we've been there for a while, and that's kind of what the market supports. That's what the level of debt and the works here, and that's what investor appetite works for. Whereas cap rates elsewhere in the country have been compressing down. Now the spread between those two is low enough. I'm getting a lot of people coming back that were investing here 8-10 years ago that went out of the country. So it's been pretty even here, although we have had appreciation on price per square foot because rents have gone up during that time. So people have still done buildings, even if they're selling at the same cap rate that they bought at a few years ago, they've appreciated quite a bit. The other really nice thing here, as far as metrics go, that a lot of people are surprised about that might be used to looking at other parts of the country is our expense ratios here are way lower than you might see in comparable properties. My buildings operate usually anywhere between about a 25 to a 35% expense ratio, which sounds ridiculous. Like that sounds like I'm overselling something, right? The broker and me trying to sell you a higher cap rate than is real, but that's real. And that's for a few reasons. One, we don't have much weather here. So as a result, you don't have a lot of the maintenance that needs to happen in some other parts of the country. Secondly, as a result of the weather, HVAC systems are just not what they are anywhere else. Our typical units have got one gas wall heater and no AC, and that's it. So there's very little to maintain. If the wall heater goes out, it's $1,200 installed and you're done. So just the maintenance on those buildings is a lot less. At $400 plus per finished square foot, the same invested capital here in California buys you a much smaller property, which to a lot of people sounds like a bad thing, and that's why you want to go buy in the Midwest somewhere because you can buy more building. On the other hand, if the same invested capital buys you a small building, that small building doesn't require as much for maintenance. It's got a smaller footprint. It's got a smaller roof. Everything is smaller. There's less to do. A 6-unit apartment building here is going to cost you $1.8 million. And that's a pretty basic building. There's like no common area amenities. There might not even be a common area electric meter. It may or may not have a laundry room. There's definitely no elevator. There's no basement. There's not much going on, so they're pretty easy and simple to operate little basic buildings. A lot of them are pretty old. So the condition runs the range and you've got to do your inspections accordingly. But a lot of people don't think about the market here that way. It's a surprisingly easy place. The buildings are pretty simple.
Very interesting perspective. I hear those per square foot building costs are $350 to $400. And it's like, well, there's just absolutely no way that I could even consider that. I mean, there are doors going for $60 a door here in North Carolina. I mean, those are Class C, almost Class D properties. And yet, I mean, the cap rates are around 5%, 4 to 5% around here as well. So the cap rates are not varying that much, but the cost per door is significantly different. And you're classifying those as workforce housing. That just is amazing to me that a workforce housing can be affordable at that cost for anybody, because with the wage structure here in North Carolina, there is no way that workforce housing could afford anything like that. So how can workers afford to live in California?
Great question. So that is, I think, at the foundation of kind of the discussion about California, right? At the very bottom of the wage scale, workers can't really afford to rent their own place in these types of areas. And even, these areas are about as cheap as they come here. We're kind of one step above the very cheapest that you can get. So we see a lot of cohabitation. We see a lot of multi-generational households. Depending on where you go and what neighborhood you're in, you may find a ton of people living in a 2 or 3 bedroom unit in order to afford it. There's definitely investors that take advantage of Section 8 and they pay really great competitive rents here. The other thing to consider is wages in general in California are much higher. So the same job out here is often going to pay much, much more than it will in other parts of the country. We're experiencing the same labor shortages here that I think a lot of the country is here coming out of COVID, while extended unemployment is still out there through mid-September. And there's all these entry-level jobs that are virtually impossible to fill. And so we're seeing that happen here as well with everybody else. But generally speaking, even entry-level jobs here, I mean, I've talked to restaurant owners that can't get hired dishwashers for less than $20 an hour. So there's definitely the ability of the labor pool to afford a little bit more in the right jobs. And so I think what we're seeing, the conversation about the demographics is not so much that everybody's leaving California. The people at the very bottom of the wage spectrum, some of them definitely are. If that's what they're going to be earning and whatever their trade is, I've known people that have needed to make that decision and they've moved to Arizona, or they moved to Vegas, or wherever. But by the same ticket, we have a lot of really high wage jobs that come here, a lot of companies that are willing to pay to be located in an area where there's as much talent as there is in Southern California. And so the general wage standards are much, much higher here. You'll find people working pretty basic jobs getting $60,000, $70,000, even $80,000 a year, which in a lot of other markets would be unheard of. So it's kind of just a different world we're in. And our numbers look low compared to what you'd see in Northern California. If you talk to some people that invest up there, it's just wild. The money that's present in the tech industry up there has distorted the wages that are paid across the board, even jobs that have nothing to do with tech. That's just the nature of the geography, I guess. So it sounds insane to people that invest elsewhere, but it works. We have tons of demand for our units. Vacancy rate in our property manager partners portfolio, which is about 3,300 units, is in the threes. And a basic one bed is going to cost about $14,50. And those tons of demand for that stuff.
Well, these are interesting things to know and good things to consider. And I like how that contrarian perspective does open up opportunities for people who are willing to take advantage of all of that. Gives a whole different perspective on California than what I think most people have in conjunction with that.
For sure.
Well, Anthony, before we go into our last segment, tell the folks how they can get in touch with you.
Absolutely. You can go to our company's website. It's buckinghaminvestments.com, all spelled out and plural. And we've got tons of educational materials up there, videos, guides, downloads, market studies. If you're curious to get into the detail of some of the numbers that we were just talking about, that's available. Or feel free to shoot me an email. I'm at anthony.walker@buckinghaminvestments.com, or search for me on LinkedIn. I'm sure you can find me.
Excellent. Well, Anthony, share with us one of your most difficult setbacks in life, and how did you come through that time, and what did you learn from that?
Well, in life, I'm not sure about that one, but I'll talk about one of the early deals that I did as a beginning multifamily investor. This was in Long Beach. So I bought a little duplex with a unpermitted third unit, getting back to our city rules conversation, and had really nice numbers at that point. It was about a 7 cap. This was a long time ago. This was 2011 or so. And everything went great for a while. And then at some point, somebody tipped the city off about the bootleg unit. So they found out about that and forced me to convert the property all the way down to a single family residence, despite the fact that it had been a permitted duplex going back to the 1950s. This was like my very first multifamily investment. I bought it for $300,000 back. It was 2010 or 2011. And so, I freaked out about that. Their argument was that the lot size, this was on a 2,500 square foot lot, so tiny little lot, that the lot size didn't support 2 dwellings based on the zoning, even though there were permits on file going back to the 50s showing it was a duplex. So unfortunately, I had to capitulate, converted the whole property back to a single family, removed the bootleg in back, turned that back into storage, opened a wall up in the main structure to make the duplex into one house. Luckily, the tenants in the front house were willing to take the whole thing. And so they rented the entire unit, took over all the utilities and everything. And then, of course, they went and subletted everything to other people that they knew and made a profit off of that. But luckily, it was able to cover during the time that I owned. I did end up owning it, I think, for like 4 years, selling it. I still managed, it wasn't that bad. I still managed to double the equity that I had despite. So I had good timing on the purchase and the market did me some favors, but that was almost turned me off of the idea of investing altogether, because that was my first purchase. And I thought, oh my God, if this is what this is like, you can have the value of your investment immediately devalued by $100,000 or $200,000 with no warning. I don't know if I'm cut out for this, but it did work out okay.
Yeah, that could be very, very devastating.
Yeah.
To particularly a new investor. Well, I'm glad you were able to make it through that time. And well, as hard a lesson as it was, I'm sure you learned some valuable things about bootlegging apartments. Well, imagine that you have come to the end of your life, and as you lay on your deathbed, what will you look back on with your greatest sense of joy and fulfillment?
I think, of course, my family brings me the greatest sense of joy. I'm sure that's an answer from a lot of people, but I have 2 little girls and a boy. And the girls are 3 and 1.5, and an 8-year-old boy. And I just hope I could be a good example to them. But beyond that, I think I would like to be remembered as a teacher. I like to teach people about what I do, help people create financial independence, and create a life for themselves.
Well, Anthony, it has been wonderful getting to know you, and thank you so much for sharing your insights on investing in Southern California. What a different perspective that is from what we hear from people outside of the state who probably don't know what they're talking about. So thank you, Anthony, for being with us today. It's been a pleasure.
Thanks for having me. My pleasure.
Thank you for tuning in to Real Estate Investing Abundance, brought to you by Steed Talker Capital, a company working for passionate professionals like you to develop financial independence built on solid, passive real estate investments. As part of our effort to make the world a better place, Steed Talker Capital contributes to activities and organizations committed to better understand the equine. These endeavors attempt to enhance the human treatment of horses worldwide. Steed Talker Capital, working for a world where all creatures, great and small, flourish abundantly. For resources to develop your financial independence, connect with us at steedtalker.com.